This is the video for the week ending the 28th of August 2015. Monday, nothing tradable. If we even look on the Forex Peace Army, there's just that there. So it's a very quiet week again. We do have the inflation expectations, but it's not really a tradable release. Then we go Tuesday. And really the only one we've got here is the new home sales. The consumer confidence doesn't really make too much change or difference. New home sales does. It's looking like it's meant to be a positive. So if you do have any trades in here that you're looking at taking, it would be good to do a bit of positive on the US. We do have a bit of a way to go back up with the US to bounce back up after some really bad 2 weeks just from the Chinese data having a large effect on the US and when they're going to increase rates. They may not now. They're not even sure. It's having a larger effect on the US than what it is on Australia. That's what really large news that is really bad for the economy does. It doesn't. The medium sort of Chinese news or even large Chinese news will affect Australia straight away, but if it's large enough to be quite bad for the economy, it will affect the US, especially if they're now putting back when they're going to increase their rates, which also means safe haven things like gold and the yen will go up due to this. So your large bad news that's really bad for the economy will make people go towards safe havens, as in gold and the yen. So that is why last week you saw a bit of a bounce in the yen. And if you look at gold, you see a large bounce in the gold as well, as the US economy kind of comes to terms with the fact they may not be increasing interest rates. And they definitely, we're down to like 25 or 30% chance of them doing it in September, which it was up to like 45 or something like that before the Chinese data had come out. New home sales, and again, it's probably going to be a week of either a bounce back for the US, but it's very hard to tell. The economy is quite fickle at the moment. So I would be trading probably a 60-70 gap, 10 pip take, 15 pip stop loss. Old FNG and trade into this chunk of negative data from the New Zealand dollar. So some nice positive data here and into the nice negative data here. I mean, the trade balance is minus 600 compared, that's its forecast compared to minus 60. All this is negative. Except for merchant things, but it's pretty much that's not a big one anyway. But the trade balance being negative, so looking for FNG, a nice positive trade, positive kind of deviation here, and I'll trade that, and I'll probably hold on to the New Zealand one into this news here. And then I would actually trade the event, although I would only trade it on negative, or I would trade a positive if we get a positive trade balance. I wouldn't trade a positive trade balance if it's like minus 500, even though that's not as bad as it's forecasted. Minus 500 is still really bad. So your trade balance you want in positive. Any negative is still quite bad on the economy, even though it's forecast, it's not as bad as what the forecast, so you'd get a bit of a spike, but overall that is still negative data. You've got some speeches here, they're worth listening to. If you listen, you might hear things that you can trade out of that sort of news release. We've got core durable goods. Again, that is tradable. It's not a huge one, but is tradable. There's not much else around it. Normally durable goods and core durable goods follow suit. You do want to kind of be out before Dudley speaks there. So I'd probably go a 60 gap, 10 to 15 take, 15 stop loss. Alt F&G on a large enough deviation. Now, House prices is a good one. You can get a little bit out of that. Pending home sales. That's the one we're doing. So pending home sales, that is a good one. And prelim GDP. So you'd be trading both of these. I'll trade the prelim GDP on what FNG is telling me to do, which is probably a good trade. It's looking like it's meant to be positive. So again, you got a few good positive US data points this week. It got sold off quite heavily last week. You may get some good opportunities to be buying this back into these good data points. So, you know, you could easily do your unemployment claims won't have too much of an impact. So you can probably do a 60 gap, a 10-15 take, and just follow the deviation from the signal here. Pending home sales, I'll really only do it with the same sentiment. The prelim GDP is a bit bigger, core durable goods. If they're all positive, then trade pending homes in positive direction. Then we come into the prelim GDP. There's not really much else on around it, so you could probably go for, and it is 6. So it's a London session, but the New York session isn't across yet. You could go for a 50-60 gap, 10-15 take, 15-20 stop loss. That's what I'll be going for there. And these other data points aren't really worth trading, to be honest, when you actually get in there and have a look at them. Unless you want to do a large enough deviation, I wouldn't be trading them on Amazing EA. It is possible to trade them on FNG. All the best, and that's the end of that one.